thrilled to be here, just because what you all are doing in practice, focusing on details, is a spiritual truth of our country.
You know, we can be Democrats and Republicans, but most Americans are patriots.
For over a decade now, good ideas have emanated from the BPC.
Thank you for convening this very impressive group of thought leaders.
Your organization has brought together leaders from across our society to advocate for common sense solutions to our most challenging problems.
Because if it's bipartisan, it's much more likely to pass.
When you have people philosophically and ideologically in two different worlds, and they put them together on a committee, that committee usually is not very productive. Once we get staffs blending, and John and I, they know that the members are friends and we talk, things can happen.
Thank you, Anand, for that introduction, and to the BPC for its important efforts.
Thank the Bipartisan Policy Center. You guys are great.
We all have bipartisan responsibilities to this nation to defend principles that have long made America the beacon of hope.
It's going to take all of us to try to turn down the temperature and really focus on what unites us.
Good afternoon. Welcome to another event hosted by the Bipartisan Policy Center. Today, in partnership with Gusto, we're talking about entrepreneurial recovery. What can policymakers and others do to support the survival and growth of new, young, and small businesses? We have a terrific panel discussion that will be moderated by our friends at Gusto. But first, we have some keynote remarks. First, I'd like to turn it over to Senator Maggie Hassan.
Hello, I'm Senator Maggie Hassan from New Hampshire. I'm sorry that I couldn't join you in person, but thank you to the Bipartisan Policy Center for inviting me to address this event, and for all that you do to advocate for bipartisan solutions to some of our country's most pressing issues. That work continues today as you convene this forum to discuss the challenges and opportunities facing small businesses and entrepreneurs. Entrepreneurs and small business owners are the backbone of our economy, creating good jobs, supporting a strong middle class, and strengthening communities in my home state of New Hampshire and all across the country. But we know that small businesses are being impacted by higher costs, inflation, and supply chain challenges, and we must work to provide these businesses with relief. One way that I've focused on doing that is through strengthening research and development. During my time as governor of New Hampshire, I worked across party lines to increase and make permanent our state's research and development tax credit program. This tax credit has been a vital component in supporting innovative businesses in New Hampshire, and we need to expand it at the federal level. To do so, I joined with Republican Senator Todd Young of Indiana to introduce bipartisan legislation to double the federal R&D tax credit for startups and extend it to more small businesses. Building on those efforts, Senator Young and I introduced a motion to strengthen R&D as part of the Competition and Innovation Package. This motion, which passed on an overwhelming bipartisan vote, supports expanding the research and development tax credit for small businesses and preserving the ability of innovative U.S. companies to fully deduct R&D investments. By investing in R&D, we can create jobs, build a stronger economy, and outcompete countries like China. And critically, we can help ensure that entrepreneurs and small businesses have the resources that they need to turn their innovative ideas into reality. Supporting R&D is just one of the priorities in our broader innovation package, and I'll keep pushing my colleagues to find agreement on this package so that we can get this done. Thank you again to the Bipartisan Policy Center for all of your work, and I look forward to continuing to work with you and members of both sides of the aisle to move our economy forward. I hope you have a productive conference.
Thank you, Senator, and thanks for your leadership on the R&D tax credit, which we'll discuss today, and other measures to support entrepreneurs and small businesses. Now, I'd like to turn it over to my colleague, Ethan Plotkin, for a conversation with Congressman Ron Estes about entrepreneurship and small business.
Welcome, Congressman. We're thrilled you could join us.
Well, great. I appreciate the opportunity to talk with you.
We're talking today about entrepreneurial recovery, essentially how government can better support small businesses and entrepreneurs as we exit the pandemic and look toward growth. So let's start with the view from your district. You represent a large part of Kansas, covering cities like Wichita, small towns, rural areas. So what's the role of small and young companies in the Kansas economy, and how are they doing? What's their outlook?
Yeah, we have a very big entrepreneurial focus in Kansas, and particularly in my district in South Central Kansas. So there's a lot of small businesses. There's a lot of startups that are trying to get their feet on the ground. So they really struggled through the pandemic of how to keep the lights on and the doors open, going through the process. A lot of the work that we did early on when the pandemic shut things down, things like the Paycheck Protection Program were really a lifeline to help make sure that small businesses were able to keep open and keep operating. And it was so beneficial for them from that standpoint to keep their employee base and to be able to go through that process. But now they're starting to struggle even more. We'd about turned the corner last year when the vaccine was being rolled out that had been developed with Operation Warp Speed, and people were able to get back to work. But now, there's just so many headwinds working out there. A lot of workers haven't returned back to work yet. We're not nearly back to the workforce participation level, so that's causing an ongoing issue. It's been there for an extended period of time, and what's been building up over the last year is just inflation and the big hit that they're having to face and deal with. And yesterday we saw the new inflation numbers, 9.1%. So that's a huge impact on just the year-over-year basis, let alone what's been cumulative over the last say year and a half through that process. So they're struggling to keep their doors open. We have restaurants that, for example, have to close their dining room for dinner, or close the dining room and only do takeout service because they don't have enough employees, or they can't afford the cost of keeping things open. Have others that do an across the board menu changes and price increases just because of the costs that are impacting them so severely.
Congressman, you mentioned inflation, obviously the dizzying CPI numbers we got earlier this week. You won't be surprised to learn that it's not just Kansas that's being impacted by this phenomenon. It tops almost every survey of small businesses and entrepreneurs as their top challenge. So what can be done to help them through this?
Yeah, when you really look back, and even earlier this year, 3 or 4 months ago, surveys within the small business community were showing that 80 and 90% of the small businesses were already being hit with inflation and the impact there. And at one of the surveys about that same time said that there were over half of them were concerned that they're going to have to shut their doors because of the rising costs. And inflation's such an insidious thing because it continues to grow and grow and grow. And right now the year-over-year numbers, which yesterday for the month of June were released at 9.1%, that's a high number. But if you really take a step back and say, going back to when inflation really started growing, which was in January of 2021, it's actually been up 12.5%. So anything that you bought in January of 2021 now costs 12.5% more. And in some categories, it's even more than that. I was looking at things like gasoline that's up 50%, and looking at electricity's up 13%. Some of the things that really drives the small businesses that they have to they have to be able to drive their fleet of vehicles. And if you have to replace a vehicle, it costs 11 or 12% more than it did. You have to keep your lights on, and electricity costs drive through that. And the bad part now when we look at this is that the Federal Reserve was so slow in coming to bear on what the issue was. I think it got caught up a little bit in politics. One is the first 100 days of a new presidential administration, and Chairman Powell was wanting to be reappointed as the head of the chair, head of the Federal Reserve. And so, they ended up talking about transitory, which was the message coming out of the Biden administration, was that inflation was transitory. And so they really gotten behind the curve on how to control that. And now they're having to come in heavy-handed with increasing rates a whole lot more. Yesterday's numbers are probably going to result in another 0.75% interest rate increase when the Federal Reserve meets the next time. And And what that does is it slows down demand, but it also slows down supply through that process, because there's a burden of, how does a business afford investment? Whether they're trying to, expand or remodel or maybe replace one of their delivery trucks. They have to borrow to do that. So that's a damage to them. And if you look at the monthly numbers, which is what I look at a little bit more than the year-over-year numbers, is the most recent month of June, inflation went up 1.3% just in that 1 month alone. And so you tend to look at the last 2 or 3 months because you see the most recent trends. And it's been consistently like that the last 2 or 3 months, which that really equates to a 15% inflation rate on a year-over-year basis. So we're going to continue to see impacts with inflation. Obviously, there'll be some monthly variations, just as things like gas goes up and gas goes down in the course of any 1 month. But those are all concerns that affect whether small businesses can keep their doors open and be able to serve their customers.
So much of inflation is expectation driven. If you think prices are going to go up, then it becomes this self-fulfilling prophecy that you described. And small businesses can't afford to, play it too safe when they're worried about price increases. You've long been a champion. Go ahead.
Yeah, I was talking to a developer a couple of days ago, and they're trying to get contract and do new projects, and he was saying that the quotes for some of their supplies, like large doors for a building that they're putting in, basically they were getting a 24-hour quote, a quote that was good for 24 hours because they didn't know what the inflation rate was going to be, and so their vendor would only promise a 24-hour time frame for their quote. So
we can hope that the Federal Reserve's steps that they're taking will help drive down the expectation of price increases, but time will tell. So you've long been a champion of public policies that might help support innovation-based small and young companies. Most recently, you co-sponsored the Bipartisan American Innovation and Competition Act, which would provide immediate R&D expensing for companies. Talk to us about the R&D tax credit and what it means for small businesses and entrepreneurs.
Yeah, I mean, inflation and interest rates really do put a crimp on how a small business can manage their operations. But when you look at to the future, is what's best for us is how do we get good economic growth? And one of the key things to do that is how do we continue to innovate? I mean, America is a land of great innovation, and our tax law right now currently incentivizes companies to go do research and development overseas because of the tax treatment that they get. And the direction that we're looking at right now, when we passed the Tax Cuts and Jobs Act in 2017, basically what we did because of some Senate rules, we ended up, it was only a 5-year time frame that allowed businesses to immediately expense their R&D expenses, so that the money you spend this year trying to develop the new piece of equipment, the new pharmaceutical, if you're a small startup, you're trying to do new developments for drug treatments, all of that could be expensed in the first year. Actually, now but because that's being phased out now, and it's going to be spread across over 5 years now. So that basically means that you lose 4 years worth of tax deduction on the costs that you incur right now trying to develop that new product. And because growth in a business is so important to be able to help make sure that we continue to keep the lights on, continue to keep employees gainfully employed, and add to the employment base as we grow employees. It's important to continue that research and development. So often you see wherever that research and development is done is where the actual manufacturing ultimately gets done as well. So you want to be able to have that done in the United States. And we're competing against other countries that are already changing their tax code so that they can attract businesses to set up shop in their countries. And we need to look at how do we make sure that we support the American economy and support the economic growth here.
Absolutely. And just a couple more questions. I want to be respectful of your time. I really appreciate you taking the time. You're an engineer by training and have experience in a variety of industries and think a lot about taxes and trade and how those affect American businesses. There's a lot of talk in Washington right now about competing with China. I have to assume when you're talking about these other countries that we're competing with in your prior answer, you're referring to China. How do you see the role of small businesses and entrepreneurs in that competition? Help us, think through this nexus of taxes, trade, and small business.
Yeah. Free trade's so important. It's done so much to lift the people out of poverty. I mean, when you look back the last 50 or 60 years, having free trade was the biggest tool for that worldwide through that process. But what we need to make sure is that it's free and fair trade. And one of the things that traditionally has happened when the United States did trade agreements was that we would slant towards what was helpful for the other country that we were doing a deal with. And, prior administration put a big focus on trade and how do we make sure that we continue to grow the American economy and we actually help the American workforce through that process and updating NAFTA to make it to the new U.S. Mexico-Canada agreement, USMCA, was some huge improvements. I mean, there were a lot of victories out of NAFTA in terms of helping the North American economy, but there were some things in there that weren't working right, and USMCA was designed to fix that. The administration also looked at China and recognized that, the same thing that presidential administrations for the last 25 years, Democrat and Republican, have said that China wasn't competing fairly. And yet it took President Trump's administration to actually focus on, we need to hold China accountable for that. I'm a little disappointed that the Biden administration hasn't continued that process. They promised as they came in that they were going to focus on trade and continue to make things happen, but that hasn't worked out. They've allowed a lot of the trade arrangements to expire, Trade Promotion Authority and some of the miscellaneous tariffs and other programs that were out there. And at the same time, really haven't held China to the fire of following up on the Phase 1 agreement, and haven't gone through and completed the discussions with the UK and Kenya and other countries that were already teed up to go through that process. So that's important that we get a focus on trade, that we focus on making sure that the trade deals are free and fair so that we can grow the American economy, but also help others throughout the world grow as well.
Last question for you, backtracking a bit beyond the R&D tax credit, how else can policymakers prioritize, entrepreneurial recovery over the next 2, 5, 10 years?
Yeah, I think the biggest things we can do, one is keep government out of the economy's way. And, there's so many decisions that get made because the federal government's so big in particular, and as well as a lot of state governments. We need to make sure that our federal tax code is incentivized to help promote economic growth. We don't need to add new taxes. We don't need to add new regulations that actually slow down and hamper the ability for small businesses or medium or large size businesses as well, to be able to have that growth, to be able to make sure that their products and their services are available to their consumers. So that's a big piece. We also need to make sure that we don't spend so much money, and particularly now that we're borrowing and getting deeper in debt at the federal level, we need to make sure that we're not crowding out the valuable use of capital in the small business world, that we don't force interest rates up, which means we need to get inflation under control so we can get back into a cycle of having reasonable interest rates so that people can make good investments with their business dollars and help grow their small businesses.
Well, Congressman, sounds like you have a lot on your plate, and luckily you're only 100 yards from the Capitol, so I'll let you get back to it, but really appreciate your time.
All right, great. Appreciate the opportunity to talk today.
All right, back to you, Dane.
Thanks, Ethan, and thanks, Congressman Estes, for your time. I'm going to transition us now to our panel discussion. This panel is going to be moderated by Elisa Harvey-Dawson. She's the Chief Legal Officer of our partner in this event, Gusto. Before I turn it over to Elisa, I want to remind our audience that some of the material that was referenced by Congressman Estes and Ethan can be found in a web explainer that VPC released earlier this week that highlights some of the survey findings among new and small businesses that Gusto conducted. And you can find all sorts of interesting findings in that survey on our website, on Gusto's website, which we'll share after the event as well. But Elisa, I'll turn it over to you for what I'm sure will be a very interesting panel discussion.
Thank you so much, Dane. I'm really happy to be here. And thanks for amplifying some of that work and survey that's been done. I have been since law school working in business and tech with innovative and entrepreneurial companies like Autodesk and Netflix, Harman, Sidewalk Labs, and now Gusto. And as folks might know, Gusto is a people platform where we offer payroll, health insurance, employee benefits, and a full suite of HR tools, with the key purpose being that we want to help entrepreneurs be able to take care and grow their teams. And this ability is just foundational to small business because they need these types of services for their very survival. And I can't emphasize enough, especially during this discussion, how essential small businesses are to the US economy. They account for between 1/2 and 2/3 of all jobs created, new jobs created. And as we all know, they were hardest hit by the pandemic. And recognizing their importance, we basically rose to the occasion, right? We gave some vital relief programs then, and not only did these companies survive, but we saw record new business starts in 2020 and then again in 2021. And so bottom line is we owe it to these businesses to ensure policy is designed to support them. And all of us on this panel exist to serve and meet the needs of small businesses. And we are just advocates for the courageous individuals who choose to become entrepreneurs. And I'm saying all that because I'm going to get this panel revved up. And I'm pleased to introduce them each one by one. And so first up, I want to introduce you to Corinne Hodges. She's the CEO of the Association of Women's Business Centers. Corinne joined the Association of Women's Business Centers as CEO in January 2019. And she is charged with bringing about enhanced sustainability and increased capacity to the association and its members. When AWBC and the National Network of Women's Business Centers were confronted with the pandemic in early 2020, not too long after Corinne arrived, she and the advocacy team just sprung into action. They responded tirelessly to small business concerns in their communities, and they championed efforts to secure resources. Thankfully, members of Congress foresaw the importance of that, and we came with record level emergency funding, which I just talked about in the form of the CARES Act. So in addition to $150,000 awarded annually to each women's business center, the centers could access up to $420,000 of CARES Act funds, giving them access to $570,000 in funds in a single year. And that was historic. And so you see there how action and advocacy helps to enable businesses and what Corinne and her company did. Corinne is from Grand Rapids, Michigan, graduated from the University of Evansville in Indiana, and attended school at the GW University, the other university in DC, among others. Next up, we also have Joshua Lee, who's the founder of Ardius. Joshua founded Ardius, which is a fast-growing SaaS startup that helps companies identify and recover tax credits. So I actually have had the pleasure of getting to know Ardius and Josh over the past year because Gusto acquired Ardius almost a year ago to this day. And I really have enjoyed his perspective on many angles, that being a startup founder, investor, and former Big Four accounting firm. What really attracted us to Ardius was, again, that focus on helping small and medium-sized businesses. And we heard a fair bit already today about tax credits, because Ardius is intended and designed to help companies recover millions of dollars, that's right, millions of dollars in tax credits for things like research and development that they've done in building their product and company. And that, especially in these times, can't be more important. As I mentioned, it was acquired by Gusto a little over a year ago, and they've been a welcome addition to the Gusto family. Prior to Ardius, Joshua was investing in building startups through an incubator and a venture studio. So he knows a lot about how you can enable small business. He started as at E&Y, and that's where he got his expertise in tax credits. And he's a SoCal native, both UCLA and USC, now part of the Big Ten family. And that's how, and he built his company in SoCal. And then last but not least, we have Ryan. Ryan Metcalf is the head of U.S. Public Policy and Global Social Impact at Funding Circle. In that role, Funding Circle is a global online small business financing platform that has helped lend more than $18 billion to over 120,000 businesses, hugely impactful. And at Funding Circle, Ryan works to ensure government policies and regulations are in the best interest of American small businesses, and that Funding Circle has a positive social impact on communities in which it operates. Previous to that, Ryan worked in international trade agreements for the Obama administration to create new opportunities and higher living standards for families. And he grew up part of a small business, working for his family's traveling outdoor amusement business, which sounds fun, and is also a small business owner himself, whose passion is removing regulatory barriers for entrepreneurs and helping them achieve their aspirations, which I think we can all appreciate. So now we have a stellar panel here, right? And we know that they have a ton of lived experiences. So I really want to hear from them. I would love to get your reactions to some of the things we heard from Senator Hassan and Representative Estes. And so I'm going to start actually with Ryan to get your reactions to some of what you heard.
Sure. Thank you so much to BPC and Gusto for having me. It's an honor to be here. I mean, certainly, I think the one common thing that I heard from both of them is that government has an important role and some important levers to pull to help small businesses compete, not only locally, but globally, because we do live in a global economy, and a lot of the problems that small businesses are dealing with are global in nature, and whether they like it or not, government is probably the one entity that can help them get a leg up and compete. And so it was nice to hear that.
Corinne, how about you?
I mean, I go back to what Representative Estes was talking about. You hear this phrase a lot, and maybe we all a little bit differently, which is if government would just get out of the way. I mean, I agree with the sentiment behind it, but at the same time, it's going to take government fixes to some of the problems that government has even created. And so, you know, we think about what creates an environment where entrepreneurial ideas and innovation can thrive. We've also heard the phrase that necessity is the mother of invention. And in a time when struggle is real, economic pressures are real, this is when new ideas are really emerging. And so is the entrepreneurial highway open for business, or is it instead blocked and barricaded? And is it full of potholes? When we think about some of the paths to starting a business or adding a business license, then we have to understand this is not only affecting different communities in different ways, it's also affecting our small businesses the most. I was visiting a small business, a service sector business just yesterday morning, who told me that I could not buy socks from them because they found it too cumbersome to secure a retail license and expand their business, and they're hurting for revenue, but the local ordinances around the retail and storefront licensing was just really arduous. And we've seen some examples of really strong entrepreneurial successes when local authorities are incentivized, even by the federal government, let's say, to streamline some of those processes. So that was just one thing I was thinking of when I heard those remarks.
So many great things that you said. Is the entrepreneurial highway open for business? I love that. I'm going to write that down. Josh, what reactions did you have from hearing the senator or representative?
Yeah, first off, thanks for having me. I totally 100% agree with Ryan and Corinne on the government side. Let's talk maybe more about the business side, right? When we talk about that new wave of entrepreneurs and innovation, just last year, as you alluded to, 5.4 million new businesses in 2021. And this was during a pandemic year. So for us, we want to also make sure that they're aware of these legislative changes, this available new capital to them. You know, specifically, most of these companies, new founders, they're focused on one thing, and that's running their business and their passion. So not really in the business of, you know, finding or taking tax credits. So I think it's up to us also to make them aware that these credits exist, as well as helping them, you know, in claiming them, and not only being aware of them, but actually being able to have access and actually claim those credits.
So true. There's so many things out there, but the way and you think about the information flow that we have and how we can digest it. So enabling companies to actually get access and understand what's available for them is critical. Before we go on, I think I need to level set and let's make sure we kind of understand what we mean when we're talking about sort of small businesses. So at Gusto, we serve over 250,000 businesses on our platform, and our typical customer has 100 or fewer employees, and we span all industries. I'm curious if each of you could talk about the characteristics of small businesses that you serve, and then maybe give us your thoughts on the state of small and new businesses today. Josh, I'll go back to you to start.
Yeah, well, first off, I think for any new business owner or small business, the economy has changed, and it wasn't the same economy that we just were in even 3 months ago. As in real life conferences have come back, I've been able to talk to some founders in some companies, and things like the capital that was available to them in the PPP or other legislative things, I mean, they were growing jobs, right? And the economy was about to maybe make that turn. And all of a sudden, the economy also then flipped. And so now this capital that we were once using for new jobs might even just go back to saving existing jobs and keeping them in business. So definitely the climate has changed, and with it comes that uncertainty that all entrepreneurs are facing. And so for us, we're trying to make things that are super complex like taxes very, very simple, right? And hopefully with technology and software, things of that sort. But definitely it's the climate is changing, and there's a lot of uncertainty out there.
Thank you. Corinne, how would you characterize the types of small businesses that your organization serves?
Well, sure. Thank you so much. We operate a network of 146 women's business centers across the country. So just by the nature of, the name of the organization that's serving these small business clients, we're going to see primarily women. About 70% of our clients end up being women. And of course, we don't turn anyone away. And of the women that we're serving, well, I should say of all the clients really that we're serving, 56% identify as BIPOC. And the other part of that percentage, it can also be, white businesses, but also folks who aren't sharing their demographic data, which we tend to see quite a bit in our communities of color, that sort of distrust of, I don't want to share my demographic data with you. So we put them in the rest of the bucket. But we are serving almost entirely economically and socially disadvantaged businesses. And that just, unfortunately, when we think about that bucket of businesses, it's growing as the economic pressures are increasing. But also that's where the surge of new business starts is happening. And so that's where we're seeing the greatest demand of services on networks like ours, on the women's business centers who are there to serve those communities. We really saw a surge during COVID. We probably had 10x demand on the services of women's business centers because members of Congress were really great about communicating with their constituents. Hey, if you need help accessing any kind of support, go to a women's business center. And we saw demand that was quite frankly unprecedented. And then as you characterized in my bio, we were the recipients of quite a bit of support funding through the CARES Act, which was phenomenal. Unfortunately, small business and the women's business centers are all caught in the same place today, which is that funding has run off the cliff. The demand is still there, and I would say in many ways, the need is even more critical than it was before, and the urgency for support and the feeling of crisis and impending crisis on our small businesses is greater. And I think there's this sense of kind of hopelessness, and they're not seeing that there's relief coming their way. And so the women's business centers are great about walking them through their options and helping them find capital and getting them capital ready. But ultimately, if there aren't any customers, it doesn't necessarily make a business very profitable or viable.
Yeah, that's tough. Extremely tough. And we'll talk a little bit more, and we'd love to hear more from you about some of the things that we think can be done. Before we turn to that, I'd love to hear a little bit from Ryan about some of the businesses that you've served. I mean, Funding Circle has enabled funding for so many. How do you characterize the businesses that you work with or your organization works with?
Sure. I mean, similar to Gusto, we serve all industries. We've served 120,000 since 2010 nationwide. We're an online small business financing lender, and we offer unsecured loans anywhere from 25,000 to 500,000. But to give you an idea of the size of that, we tend to serve the truly small or the smallest of small businesses. The average loan size is $152,000. And when we did PPP, it was, I think, $30,000. So it was very small. But I'll keep on the analogy of the fact that I grew up in a traveling carnival. Small businesses have been experiencing a roller coaster of emotions. And so the three are, one is more Americans are starting new businesses than ever. In 2021, Americans have started 5.4 new businesses. That's 20% more than any other year on record. And small businesses are creating more jobs than ever. For businesses with 50 employees or less, they created 1.9 million jobs in the first 3 quarters of last year. That's the biggest record ever in a single year. At the same time, they're experiencing significant barriers of getting access to capital to start and grow their businesses at a time when they need it the most. To give you one point on this, compared to pre-pandemic levels, the share of applicants receiving all of the funding that they sought fell from 51% in 2019 to 31% just last year.
Wow.
It was already a significant problem with only half of people getting the capital that they need. Now we're looking at 3/4. And so a lack of funding means less growth, it means less jobs, it means more businesses fail. And so small businesses are truly on a roller coaster.
It is so true, and the dynamics have changed as each of you all spoke to. Last month Gusto released the results of our annual survey of entrepreneurs. And one of the notable findings was that more new entrepreneurs have been starting their businesses, it seems like, out of opportunity motivation rather than economic necessity. So in 2020, we had found that 1/3 of the respondents started their businesses because they had been laid off. In 2021, 1/3 stated they started their businesses after voluntarily quitting their job. And additionally, our survey found that tax credits and government grants and funding were 2 of the top 3 needs for these small businesses to help them grow, with the top need being needing more time to actually work on their business, which makes sense. So this is an exciting and an interesting shift. I'm curious to hear more about how your organizations are supporting this new wave of entrepreneurs to help them grow their businesses. And Corinne, when you talked about kind of your constituency can include a lot of sort of this distressed and economically disadvantaged companies, how does that sort of data, resonate with you that we found in our survey, and how is it impacting kind of what your organization can do to help these businesses that you're seeing?
Yeah, well, I mean, Alyssa, that the women in our economy have been characterized before as this care economy. That women are caregivers in the home, not just for children, but for other family members too. And we sometimes leave those other family members out of our thinking process. I'm not challenging Gusto's data. Y'all are data experts. And I know that the data you get is really reliable. But what we're seeing among our audience, our constituents and stakeholders, is telling a little bit of a different story. We are seeing still a tremendous surge of entrepreneurship among people who are feeling forced, and it may not be that they've been laid off. They may be being forced to add the side hustle in order to generate additional revenue into their business. And so there's a desperation around revenue associated with it, and it may not be coming through in some of the way that we're surveying, that without this side hustle revenue, they're not able to provide groceries or send children to school, send children to college, or provide, for medical expenses. And, it compounds also the problem that we talk about work-life balance as if there is such a thing, but it really has compounded the problem that women are sandwiched between all of those pressures.
Yeah, that makes sense. And, that certainly resonates because we did see a shift, but we didn't see it go away, the necessity, right? It was just what I think was interesting from our data was sort of like a little bit more, we're pointing to the other reason, but the one that you stated absolutely continues to exist and is something to be combated. And to understand, we also saw that greatly amongst women and women of color and why they started their businesses. So, I definitely identify with exactly what you were saying in terms of that. Ryan, how about for you and your organization? What are you seeing out there?
Well, I can talk about Funding Circle's mission is to be the place where small businesses get the financing that they need. And so we meet entrepreneurs at the point of access to capital. And we have 3 products that we offer primarily. One is our term loan product, which I mentioned earlier, which is 25 to 500,000. But post-pandemic, we kind of added 2 new products, which are really important in helping kind of fulfill the lending ecosystem. One is the marketplace. So when you come to Funding Circle and ask for some financing needs, we will try to help you with our product, but our product may not be a good fit for you. And so we've partnered with an array of lenders across the industry to help you get the financing that you need. So you only have to go to one place and that you leave hopefully happy with what you need. The second thing that we've done is there are a lot of medium-sized banks in the industry and CDFIs that have tremendous demand, but they are constrained by their ability to grow because of lack of technology or expertise or know-how. So we have developed a lending as a service platform where we partner with community banks and CDFIs to essentially give them our underwriting technology, online lending platform, full service of lending suite products, so they can essentially grow. And then they can buy those loans and hold them on their books. We most recently partnered with DreamSpring, which is a regional CDFI that does incredible work on serving underserved communities. By using Funding Circle's lending as a service platform, we have now essentially made DreamSpring a nationwide CDFI. Wow. They can offer loans to their customers nationwide, and they can do it at a lower cost than they could have done originally on their own. So this is a really exciting thing that we've just rolled out in the last couple of months.
No, that's great. And obviously, without capital, how are these businesses going to grow? I'm going to turn to Josh, because as we talked about, RDS was acquired by Gusto last year, and you're trying to democratize obtaining tax credits. And both of our lead-ins, both Senator Hassan and Representative Estes talked about the importance of tax credits. So I'm going to ask you about that. I want to understand from your perspective what it is about the R&D tax credit and what can be done to enable companies who are out there to know that they have access to it, and how does software fit into this? Why is it of value in this world?
Yeah, great question. Well, a couple of things. Well, stepping back, with Gusto, our clients, are small businesses, and last year our average company that claimed the R&D credit, at least with RDS and Gusto, was on average 15. And when I say average, it's more of a median. So we have companies that were at sole entrepreneurs, sole founders, with one person claiming the credit, and as many as a company maybe with a couple hundred people, right? So that's awesome, right? Companies are starting to get access to that capital. The credits range from $1,000 and sometimes up to $250,000. However, if we look at some of the statistics, right, it's estimated that still only 20% of all eligible businesses for the R&D credit are actually claiming the credit, right? Number one. And number two, that only the top 10% of the largest companies are actually making and claiming that 90% of those credits. So there is that disparity, right, in terms of democratizing that information out to these entrepreneurs. And it's telling us that small businesses either, one, don't know about it, or they don't know how to claim those credits. So I think with technology, what we're doing is taking information that we could ordinarily get, like your payroll, right, with Gusto, something like QuickBooks or Xero with expenses, or even as simple as your tax return. We can take data and information take a look at that digital footprint, right? And actually flag things that you might actually qualify for that you ordinarily would have missed. So number two, I think the other thing that's really big is having done these credits and trying to democratize these credits on a manual basis, it's pretty tough to get out to every single small business, short of knocking on every single door. So what's usually now, that usually took maybe months and years to do, we can now do in minutes or weeks. And by automating these processes, we're finding that we actually are maximizing and optimizing these credits for small businesses, somewhere between 2.5 to 4x more when we do it through automation, through machine learning. So technology is playing a huge part by, again, flagging that information that we would have missed, and also making it more accessible, more importantly, to small businesses with technology.
Wow, thank you. Thank you for that, Josh. And, highlighting a lever, and all of you are highlighting different levers that companies can pull, but highlighting that lever is so critically important in getting that information out there and compiling that information in a way that's usable is critical. Before we go on, I wanted to make sure that the audience knows that you can submit questions. We want to hear from you all and make sure that we're addressing the things that you most care about. And so there's a way of submitting questions. I don't know all the technical details, Dane, but I believe that if you submit them, we will bring them up and give them off to our panelists to answer. So wanted to make sure that that's the case. And I don't see anything right now in the queue, but I wanted to do a quick check-in and a reminder. Okay. Barring anything in the queue, I'm going to keep going on and hearing from our fascinating panelists. And I wanted to go back to Ryan and talk a little bit about what you were talking about with respect to financing. And so last week, the House Small Business Committee had a hearing focused on fintech lending and in particular transparency. I'm curious what you think is going on there, and what's the current state of fintech and the small business lending marketplace, and how do you see those things evolving?
Sure, it was an exciting hearing for sure. So in 2015, the RB, our funding circle, helped co-found the Responsible Business Lending Coalition. It's the largest cross-sector coalition that came about regarding concerns about predatory practices in the small business lending market. We created the Borrower Bill of Rights, the Small Business Borrower Bill of Rights, which is the gold standard of lending practices and in the industry. This hearing was really focused around bad actors in the industry. So there are some bad actors in lending practices in the small business lending marketplace. It's not limited to fintech. But it is there, like every industry. There's a concern that there's a lack of information symmetry in regards to pricing, which makes it really difficult for businesses to comparison shop across products and terms. Historically, commercial financing has been exempt from consumer-like protections, such as the Truth in Lending Act, because business owners are presumed to be more sophisticated and don't require those protections. I think there's an open question as to when a business owner is actually more sophisticated than a borrower in terms of revenue, number of employees, the loan size. I think that's still out, the jury's still out on that. But what we do know is that just adding consumer protections to small business lending does increase cost. And so it's not just adding protection, but it does increase cost for implementation. But the policy focus is really on resolving, and at least the focus of this committee hearing was really on resolving that information symmetry issue. So providing uniform disclosures, which have passed in California and New York, and there are almost more than a half a dozen other states that are considering similar laws, which would essentially just create a uniform disclosure that you provide small businesses at the point of an offer so they can do that comparison shopping. The issue is a little split among the industry, particularly among merchant cash advance products. There's an argument about using annual percentage rate as the one defining metric. So there is a bill in Congress to do a nationwide disclosure bill similar to that of New York and California. It's something that Funding Circle has supported and will continue to do so.
Thank you, Ryan, for that.
Yeah.
And I want to stay a little bit on the financing. The Small Business Administration has been reauthorized by Congress in over 20 years. In Gusto's survey, we found that there was continuing racial and ethnic gaps when it comes to financing. Black and Hispanic business owners are less likely to use private loans for new business financing. And when they do apply, the approval rates are lower for these groups, which leads to discouragement with many Black and Hispanic entrepreneurs declining to even apply for a loan. Corinne, given I think I understand a little bit about the constituency that you serve and seeing the financial needs in the context of all of the other demands that entrepreneurs are juggling, can you give us a sense of how you see the financial landscape today, its impact on the businesses that you're trying to support, and maybe where policymakers might focus their attention?
Yeah, absolutely. And I do want to give a shameless plug for the Kauffman Foundation or Start Us Up Coalition's America's New Business Plan, because we're thinking about policy opportunities in the same framework. That's kind of 4 key categories. We talked about access to opportunity, just like those barriers of starting a business. Access to funding, though, that's been the historic barrier. That's why women's business centers were created, was to address this access to capital. It was mysterious back then, 30 some years ago, when the first women's business centers were identified. And there's been some illusion to several different aspects of this, like women not being able to take full advantage of PPP, et cetera. We really just see in so many circumstances that women, and that includes our women of color communities, are either not capital ready or aren't willing to take the same risk. And the not willing to take the same risk may speak in part, to the fact of the care economy. The risk calculation is greater if you're the caregiver. And so that's one piece of it. And you did talk about being approved for funding at a much lower rate. Yeah. My fellow panelist here today, Ryan, talked about his smallest loans are, in that $150,000, $200,000 category. Those are huge loans in our communities, and our smaller businesses and our service sector businesses aren't sometimes in a position to even ask for those kinds of loans at even those 6-figure levels, because it wouldn't make sense in their business. And if they're asking for a $5,000 loan, no one's even going to talk to them. Right. And so they're in a position of having to look for, some kind of a convenient, maybe something online that may be calculated at like a 30% APR, because a 5% loan is just otherwise not available. Or they're using their credit cards and they're using their personal finance capability. And it's not because they're not savvy, it's because they're in an environment where these are their only options. They're accessing the equity in their home, or they're bridging a payroll gap by putting it on the credit card, in the interim. And these are businesses in some cases who are employing 12 and 13 employees. We're not just talking about solopreneurs. We're talking about viable businesses that do have a demonstrable impact on the economy. And so we've got to think about the businesses with the larger loan, 6-figure loans, which are still considered small in a lending conversation. But we need to also think about these micro entrepreneurs and how access to capital can be served, because they can't get to that 6-figure product until they've grown into it. And getting them there takes, and many times, more effort than it does for some of the more mainstream business types who are maybe starting their business at a much higher rung of the ladder. A long way of saying it takes more time to help a BIPOC woman-owned business access capital than it does, a fintech owned by a man business. It just doesn't take as much time and support to get them there as it does, some of these other communities. So we know that the technical support that's needed is so much greater.
Thank you, Corinne. Josh, when I initially was sort of introduced by our business development team to R&D tax credits and RDS and some of the options out there. I initially was like, oh, that's like a wealthy startup company's thing to access. You earlier today talked about the size of your customers, right? Which are much smaller. And so R&D tax credits can form an important piece of the financing puzzle for entrepreneurs at, it seems like, all sizes and levels. I'd love to hear your reaction and more about that, and what you think the importance of the R&D tax credit for new businesses are. What are some of the challenges in using it, and how they can be improved?
Yeah, that's a perfect lead in, because tax credits traditionally were used to only offset companies with tax liability. So meaning if you owed $1 and you had $1 in credit, you could offset, those liabilities. But there was a slight problem with new companies and startups. Traditionally, they were not profitable, and they didn't have any tax liabilities. So these credits were just sitting there, perhaps being deferred as an asset that could actually go into the hands of these entrepreneurs. Huge shift, right? Back in the PATH Act of 2014, credits started becoming utilized against payroll and payroll taxes. And that was huge, because you could have all these startup companies and small businesses, that were pre-revenue or even unprofitable, actually now be able to access and utilize these credits against the one thing that they did have, which was payroll and payroll taxes, which is why it's amazing, with what we've been doing with Gusto. They've been trying to figure out a way to get that cash and these payroll taxes back into the hands of the entrepreneurs and companies quicker and faster. Even when you're able to claim it and substantiate these credits, it could take up to 6 to 9 months to get the refunds back into the hands, right, of the taxpayer. And so with Gusto, we did something with Ardius in actually utilizing these credits against each of their payroll cycles. So imagine reducing that payroll cycle by as much as 10, 15%, right? Which is a huge, huge burden, right? That would allow them to reinvest that perhaps in hiring new and additional people, or putting it back into innovation or R&D, and getting it to them on a real-time basis has really, really made a huge difference in the way they actually run their business. So I'll give you one example. There was actually 2 exact companies. One was in manufacturing and the other was developing a beauty product. And each of them came to us and number one said, hey, we don't think we qualify. Little did they know the tax definition of R&D is so much broader. But not only did we analyze their current year for their R&D credit, we actually were able to look backward 3 years in money that they've already spent. And it was very, very significant in the terms of the amount that we found. Not only was it not known to them at the time, but 2, it was refunded to them. So they actually got a huge lump sum of money in terms of the liabilities that they had paid for, which is why it's, again, not about the credits itself, but getting it into the hands, right, of these entrepreneurs. And the fact that it's a credit, it's non-dilutive. They're not giving up any ownership or equity. 2, it doesn't have to be paid back. I mean, this is a credit, right? And this is why, again, with Gusto, when we were looking at companies to partner with, ultimately with 250,000 customers, it's nice to be able to look in there and have the ability to let them know that they qualify for these credits.
Yeah, no, absolutely. Okay, we are down to our final couple of minutes. And so let's end with a focus on public policy. Elected officials of all types are quick to express support for small businesses and entrepreneurs, which is great. And it's also bipartisan, which, oh my goodness, bipartisanship, we gotta love that. In the current session of Congress, there are dozens of bipartisan bills aimed at supporting small and young companies. Many of those don't really go far enough. And when they do, they get attached to these larger bills. So I want to ask each of you about where you would encourage policymakers to prioritize. If they could do only one small thing for small businesses and entrepreneurs and the remainder of this Congress, what would it be? I'm going to start with you, Ryan.
Thank you. Well, the latest survey that I think came out this week said that 86% of small businesses said that Congress's and the White House's #1 issue should be addressing inflation. I think the problem is there isn't much that Congress can do other than that, or that they would do, like raising taxes to quell the demand and address inflation themselves. So then I would move to the second thing on the survey, which is 71% of small businesses say their second biggest priority is affordable healthcare coverage and options. And it's still the one thing that Congress has not done for small businesses in quite some time, and still remains to be a top priority.
Yeah. Corinne.
Well, since women's business centers have been so successful in helping entrepreneurs access capital, access opportunity, and move their businesses into growth, I have to say supporting women's business centers would be my top thing. Now, luckily, we're 50% of the way there because we had the reauthorization, the modernization of women's business centers already passed by the House. And so we're talking to our friends in the Senate and hopeful that something could come up and be passed there. So with that, what we'll see is greater federal support for the women's business centers, and then they'll also have to go out and raise funds to match those federal dollars. So you'll see a huge ROI and return back to the economy, not only there, but also obviously in the economic growth of the small businesses they serve.
Thank you. And if Dane will indulge me, Joshua.
Yeah, I think the headline here is immediacy, right? So expenses for R&D, if we could expense them today and now. I know there's this conversation of amortizing those expenses over 5 years, and widening the definition of a small business, right, and a startup, making sure that the eligibility is widened beyond 5 years, maybe including more small businesses as part of that, and making sure that money gets into the hands of these small businesses, because the time is now. I mean, with the economy the way it is, it's about maybe survival and then thriving. So hopefully we can get those funds into the hands of entrepreneurs today.
Great advice, great suggestions. The time is 100,000% now. And I've learned so much, and I'm so appreciative of each of you, Ryan, Corinne, Josh. I think that's what we have to wrap up. Thank you everyone for attending. And Dane, do I throw it over to you?
Well, Lisa, I think we're done.
All right.
Thank you very much to you, and thanks to our panelists.